All right, guys, let's kick it off. I think we have a quorum and we can get started. First, I wanted to thank everyone for joining and Adi for agreeing to talk to us today. I'm very excited about it because crypto and digital asset is my favorite asset class. But we also got some incredible news from a personal investing standpoint. If you look at the CPI data, like inflation cooled more than expected to 3.2% in October from a year ago, which is just incredible. This basically is just a reassurance to investors that the Feds are likely done raising interest rates. Thank God for that, and that will help send like pretty much all the major indexes to on a high. So if you look at today, the Nasdaq was up 2.5%. S&P 500 is up 2%. I think Dow Jones was up about 450 points. It's an all sector gain. Like gains were very broad. They were all sector that gain, particularly in real estate. Real estate stocks just led the way. And the yield on the benchmark 10-year note dropped at or settled at 4.4%. I think it's going to drop a little bit more as the week goes on. Nvidia, I don't know what they're doing, but that has to be the best stock in the recent timing. They're still like on their hot streak. Depot, because of because the inflation numbers also saw a massive jump. And we are seeing that stocks in Europe and Asia are opening pretty well as well. So I think all in all, some incredible news coming from the inflation data. And the best part is, I think we are seeing the tail end of the question there, whether we're going to get into a recession or there'll be a soft landing. I think the answers are becoming much and much clearer, which is just incredible. With that, I couldn't be more excited to welcome Adi, who has been a good friend and a long-time investor and founder in the crypto space, to talk about how this may lead to the next crypto bull run. There are a few things that, if you guys haven't noticed, have been in the works for a long time. The first is that sometime last year, there were ETFs for futures for ETH that were approved to be traded and on the stock exchange. So there are like exchange traded fund ETFs that got approved, but they were all based on derivatives. I think we are nearing this incredible moment in US where spot Bitcoin and spot BTC and spot ETH are also going to get approved. And the moment that gets approved, like I think we're going to see crypto do its thing again, which can be very, very powerful for not just the crypto industry, but economy as well. So, and as you know, we have been like going through this like tremendous crypto winter, where one thing after the another hit the markets, where hedge fund, Three Arrows Capital, fell down. UST, which was a stable coin that collapsed an entire ecosystem of Luna, Terra along with it. And then, of course, the most famous of all times, which is FTX, which is a market infrastructure provider, fell right before our very eyes. And so we're finally seeing the tide turn around. People looking at the fundamentals, and things are looking things are looking up and up. So again, none of what we discuss should constitute as financial advice. We are not financial advisors. This is just a discussion about what we see and what we may do as individuals in the market. Do not trade on the basis of these advice or what you hear. This is just a discussion as a community to think about like how we think about our personal investment and beyond. And then, of course, like there are some very interesting nuances that we'll get to learn. With that, Adi, thank you for doing this, man. Welcome.
Thanks, Krish. Yeah, and it's my pleasure to do this, and thanks for inviting me. Happy to share some of my adventures in the crypto space and how I think about the space, and hopefully some of it will be useful to some of you guys. And yeah, as Krish said, this is all of this is NFA, and please do your own research.
Fantastic. So Adi, let's start with your background. Can you tell us a little bit about like where you grew up, how you got into Google and your career beyond?
Yeah. So I grew up in India. So I was born and brought up there. I spent the first 25 years of my life in India. Went to studied computer science all the way through undergrad and grad. I moved to the US in 2014 to pursue my master's degree in computer science. I went to UW-Madison. I think they have one of the the better like CS courses in the US. It was a lot of fun, and after graduating, I got a job at this company called Apigee, which is an API management platform. And 6 months later, I joined it. Google acquired them. Now Apigee is part of Google Cloud. And I think that's one of the very few verticals that is actually profitable in Google Cloud. So yeah, fortunate to be part of that. It was a really cool experience. I mean, the company was not too small when at the time I joined, but it was also not too big. It was like around 50 or 60 people, if I remember correctly, and it was a great atmosphere. Like everyone in the same office, and it was a lot of fun. Um, I quit Google in 2018 to go full time into crypto to pursue opportunities. Which I would say is somewhat interesting because usually like immigrant founders, um, you know, um, once they get into big tech, it's really you don't see often. It's not often the case that they leave to found a company, especially when the company would raised less than $1 million in funding at the time. But so I think that the reason I said that is because that I sometimes take financial decisions that are may or may not be smart all the time. So just wanted to put it out there as a caveat to everything else I'm going to say for the rest of during the rest of the call. But yeah, so in 2018, I left crypto. I left Google to go full time into crypto. Started a company that built a decentralized database network, and unfortunately, I had to leave the company because I had differences with my co-founder. So I started a second company in the NFT space. So that was my first foray into NFTs in 2019. The company got into one of the best incubators in the blockchain space, Binance Labs, and in the season 2 program. It was a fun ride. So I actually built out the first gas-free minting platform for NFTs, and unfortunately, it was ahead of its time. No one really cared about NFTs in 2019, and investors I pitched to, they were not bullish on NFTs back then because cryptocurrencies kind of faded. Had it started in 2017, 2018, and it kind of faded in 2019. They were pursuing the company behind cryptocurrencies. They were building a layer 1 blockchain, so people thought NFTs are not gonna come back. But obviously, it all changed in 2021, which when I started my third company, which is building a marketplace for NFTs. I'm still spending some of my time on it. Unfortunately, the market for NFTs right now is down, so I'm spending some time on it, but not full time on it. We still have a bunch of runway. I think 18 plus months. So yeah, so I'm also starting a couple of new initiatives, somewhat in ideation stages now. Yeah, so that's a brief kind of background.
So Adi, tell me about how did you get into crypto? Like what excited you? What were and talk from an investing perspective, not so much from a build perspective. Which assets did you first get into and at what time?
I got into ETHs in 2017 because ICOs were all the rage in 2017, right? Everyone was making 10x gains in just a matter of weeks. Every ICO back then was popping up, and all ICOs were happening on Ethereum. So that was, and also in 2017 there's only Bitcoin and there's Ethereum and there's a few other layer ones like Neo and Qtum, I remember correctly, but Ethereum was the clear market leader and had the most mind share. So it was a no-brainer to kind of buy at least ETH on ETH because you need ETH to buy or AP into ICOs. So that was my big first buy. I obviously did. I did buy Bitcoin too in 2017. Just before the crazy run happened. I think my entry price was around, I don't remember, but I think it was before the big run happened. But I think most of my biggest gains came from buying ETH and rotating that ETH into ICOs. So one example I can think of, one ICO I can think of right now, that is kind of coming back now. It's called AGIX. I think it's called Singularity Net, and the token is the token ticker is AGIX. Now it started pumping last month because of the new interest in AI and whatnot. So that was one of my best ICOs actually. I think I made like 20x or something in a week or so on that. I did a few other ICOs that did not do super well. There was this one gaming one. Forgot the ticker. I forgot the ticker, but yeah, like yeah. So ETHs and some ICOs were my first foray into digital assets.
And do you remember like what price point you got into ETH on?
No, I think it was like August 2017. So I don't remember the time, but it's definitely before the ATH. ATH was 1400 in December 2017, right? In that cycle. So I got it just before that. I think I don't remember. I think 300-400, I guess.
All right, so it's still like you still were up like 6-7x on it. Out of that.
Yeah.
Okay, pretty good. So let's talk a little bit about sort of like I've always like you were one of the first few people who not only started thinking about investing in crypto, but you also started thinking about it from a fundamentals perspective, right? Like you mentioned that, hey, ETH is just a way. We were like all looking at crypto and we are thinking, oh, let's buy some Bitcoin, let's buy some ETH. But you're like going one step beyond and saying, hey, ETH is this gateway to this whole new economy that is being built, and there's some like really cool projects. Of course, a lot of like rug pulls and scams as well. But you were looking at the fundamentals. Like, what prompted you to start looking at those fundamentals, Adi?
I was super bullish on the whole Web3. So I think 2017 Web3 was not as popular as it is today. So it's only a few people were actually using the term, and back then it really meant Web3. What Web3 really meant was taking everything that is existing in Web2 and making it decentralized, right? Starting from infrastructure stack, and all the way up to applications. So people were building decentralized Airbnbs. There were ideas thrown around to build a decentralized Uber. Obviously the idea I tried to build was to build a decentralized Postgres or a database network, right? So that was the thesis I kind of had. So I would say I'm more of a thesis-driven investor rather than a fundamentals-driven investor, because it's really hard to go by fundamentals in crypto. I mean, look at all the meme coins we have. They don't have any fundamentals, right? So it's really you cannot. I mean, some people do. I think some famous investors like Chris Bernes and maybe Anthony Pompliano. I think they are people like that. They use this discounted cash flow kind of DCF model to price assets and see if they're investable. But I don't really use those methods because first of all, I'm not familiar with them, and second of all, I don't know if they will apply to crypto because crypto is very hype driven, very very mimetic. Like what's that GameStop, right? Like GameStop was a mimetic stock. That's basically everything in crypto. Everything in crypto is very mimetic, apart from maybe Bitcoin, which is seen as a store of value kind of a thing. So I think I think if I had to like pick, maybe a few coins from a fundamental point of view, I think I would say Bitcoin because it has a limited supply and unlimited demand basically, right? Because it's seen as store of value. And Ethereum because it is seen as a de facto decentralized computing platform, and most of the developer activity is on Ethereum, and ETH being the currency of the network, I would say, and given the EIP 1559 and the burn mechanism, I would say the supply of ETH goes down as the demand, the amount of supply that comes into circulation via the rewards goes down as the demand increases, right? So I think those are the only two I could think of that have like solid fundamentals. And I'm not sure like other coins like Solana and what their tokenomics are, but yeah.
All right, we'll get back into like how to get into investing today. I think that's the ultimate question that I'm hoping to answer in this conversation. How do we look at the current ever-changing economic data and think about investing in crypto as an asset class? But let's also break down NFTs. Like you were also one of the very early believers in non-fungible tokens, which basically looks like digital art to most people, and most people wonder why something like a monkey is trading for 80 ETH or roughly $160,000. Tell me about like how do you first get into NFTs, and what was your like first like as a cultural phenomena? What do you think about them, and then how did you get around investing in them?
Yeah, so when my second company got into Binance Labs, I actually entered with a different idea. Now people are calling them rollups and app chains. Back in 2019 they didn't have a name. So the idea I basically pitched to them was I'm going to build a blockchain that is focused on a specific product, and make it easy for products to launch chains, which is basically what rollups are today, right? So that was the idea I kind of pitched to them. But as I was progressing through the incubator program, I kind of noticed it was really hard to do anything, really hard to build that in 10 weeks or whatever, right? It's really hard for me to demo something for the demo to the investors during the demo day, because it's really like building a rollup is not an easy thing. So I kind of pivoted to building a minting platform for NFTs, because at that time, there was no easy way to create NFTs. I mean, like OpenSea had some stuff, but it was kind of not super user friendly, and people had to jump through a bunch of loops. They had to get a wallet, and they had to get some ETH, and they had to upload a picture and then like mint it. It was for a Web2 user, it was like a nightmare, and it's basically a non-starter. Like once you tell people that, hey, you need to like download this Chrome extension, they already lost interest, right?
Yeah.
So I built a platform where people can go and just mint NFTs, no wallet required, no nothing. I mean, it's just a Web2. It's a very Web2 experience. I built it on Matic, and I think Matic testnet. It's called Mumbai back then. I think it's called Mumbai. Matic testnet. So I think I had to do some hackery around the nonce management and whatnot. But I don't want to go into the technical details. But I think I basically figured out a way where people can go and buy credits and use those credits to mint NFTs on the platform, and in the back end, I use those credits to pay the gas fees. So that was my foray. So that was when I started more. Obviously, I heard about CryptoKitties, and not really punks, but only CryptoKitties, only because my roommate was breeding them at the time. But I haven't really paid attention to CryptoKitties in 2017. I mean, I haven't breeded or anything. So I think building that NFT platform was really my big entry. And my first big purchase was Cheese Wizards by Dapper Labs, the same guys who built CryptoKitties. It was in 2019 too. It's basically a rock paper scissors game with NFTs, and it was really fun. I actually made a bunch of money on that, because I bought like 5 ETH worth of NFTs, and I played the tournament, and I was actually one of the top winners. I actually beat up the CEO of Dapper Labs too at one stage, and I actually made around 35 ETH from that game. So
Wow.
so that was it was a 6x, and I was hooked. NFTs are actually a thing, and people are spending money on it, and there's way to make money on it. And if you're smart, there's way to make money on it. So that was when I started paying attention to to the asset class.
Got it. So far we talked about your majors like ETH and Bitcoin. We talked a little bit about how do you leverage ETH to get into alts. And then we broke down NFTs and how you got into NFTs. Can we now start talking about DeFi and what was your first foray into decentralized finance? And if you can like sort of break it down for everyone what it is, as well as like how you got into it, that'll be phenomenal.
Actually, I missed the whole DeFi DeFi wave. I mean, I missed all the food coins. I missed all the the lending protocols. I missed the whole BSC, the Binance Smart Chain, the whole like Ponzi's and whatever on that chain. Um, I actually did not like pay or did not dabble into DeFi much because to be honest, it's really hard to pay attention to a lot of things, right? Because I was trying to build this company and I was dabbling with NFTs and um, when the vampire attack on Uniswap happened, I think that's when I kind of I also heard like Yearn Finance. I think I bought some Wi-Fi coins. It caught a lot of people's attention, and um, I did not buy any sushi. Yeah, I mean, to be honest, yeah, like it's very. I mean, like my DeFi uh, adventures are like basically nothing. I mean, I was mostly into NFTs, and
Got it.
that's where.
Got it. It's a little crazy that you're so early on crypto and you missed the entire DeFi boom. That created probably the greatest wealth in the
Yeah,
last 2 years.
yeah, exactly, and yeah, that's one of my biggest regrets. Apart and other than also missing out on investing into basically Solana and Near Protocol and Graph and Alchemy when we met all these people
Yeah,
when they're just like single founders, right? So those are my two biggest like regrets in the crypto space.
no worries. You still did pretty well. Uh, let's talk about like today. So we are here now, where COVID has gone past by. I think Randeep also asked the same question. And then there are a lot of like regulations that are coming our way. We know what happened with FTX. Assuming I have a $0 portfolio in crypto today, how should I start?
So you should look at layer one blockchains. So there's always going to be. I have this like thesis that there's always going to be a new layer one, and that is going to outperform rest of the market by leaps and bounds, right? So in the last cycle, the big winners are Solana, AYX, Near Protocol, BSC, Polygon. Um, Even the Polygon is not a layer one. Those are the big winners, right? So there's always going to be a base network that is going to do extremely well, like 100x well, like maybe even more. And so far in this cycle, there's only one or two that kind of caught the attention of the people in crypto, which is one is Celestia, which launched I think a couple of weeks ago on their mainnet, trading at a 5 billion FTV. And the second one is EigenLayer, which is somewhat similar to Celestia. I think they're launching sometime in Q1 or Q2 next year. That is one thing I'm paying attention to. And I think there's going to be a few more. I don't know what they are. I think I've heard about some layered ones that are baking in fully homomorphic encryption into their stack, but I feel like that they're mostly LARPing and there's not real tech there. But it's crypto, so you don't need real tech. You all need type. So
what about optimism?
it's already played out now. I mean, like I think that so if you're starting with you're starting this right now, I would go for like 100x plays instead of for something that is already played out. And also like optimism. I think optimism is not even in the market. Like Arbitrum is probably a better play because most people are interested in. I think it has more TVL, like and then that kind of cascade. So those kind of like things cascade, right? So having said that, I think OP Stack is something that many people are adopting. Like Base is a good example. Zora is another good example that are integrating their tech, but it's not clear how the value flows back to Optimism for contributing that public good. Yeah, so I think that's one. So like with layer ones, I'd keep an eye out for layer ones. And the second vertical, second kind of thing that I would keep an eye out for is what is the next new asset class? So there was DeFi obviously, and there's NFTs. So what is the next new asset class that that will catch attention, right? Like I was joking with a friend the other day, we should launch a GPT chain, right? And GPTs are actually going to the new asset class, after the OpenAI announcement. So because creating these GPTs is like as easy as creating an NFT, right? Actually, creating an NFT is actually more um, technically involved than creating a GPT, because GPT is just like tap and create
Yeah.
it. So so maybe something like that, something that has a mass market appeal already. And if you kind of bring that on chain, maybe there could be a play there. So I think those are the two that I'm currently thinking about.
Got it. I think what I picked up during your talk is something really profound, which is there are new asset class being built. So keep an eye out for them. And there are still like 100x plays left that you can get behind in a small, big, whatever your comfort level is, which is incredible. What are the examples that you gave for the 100x plays, Adi?
So there's two that are I don't know if they will 100x from now, but I think they will 100x for their seed investors, right?
Okay.
Celestia, which just launched their mainnet. Eigenlayer, I think they're going to launch their mainnet or their like suite of contracts sometime next year. There's one that is also getting popular. It's called Monad. They're trying to bring parallelism to EVM. So EVM right now is sequential, right? So they're trying to bring parallelism to EVM. So I think that is something that some folks that I talk to are excited about. It's called Monad. I think Dragonfly invested in them. So those are the 3-layered ones. And for the asset class, I don't know, like bring GPTs on chain. That could be fun.
GPT on chain sounds interesting. Do you really think, like, as the regulation shapes up, both like, so when you talk about crypto and AI, you're talking about the kryptonite of regulations. Like, you have to regulate AI somehow, and you have to regulate crypto most definitely. So it becomes a little bit of a harder argument to say that let's put a chain on GPT or chain on any kind of large language model. But I think it's gonna be very interesting to see how it evolves. And I think, like, Randeep, why don't you ask a question? I think, is Randeep on? I'll ask his question. His question is, Ben Horowitz and Mark Andreessen seem to have a lot to say about AI and crypto. What is your opinions?
I don't know. I haven't seen their recent what they have to say. I mean, I'm not sure what they said. But I'm generally interested. I mean, crypto and AI. I think Kush knows this and Chris knows this too. Like I'm super bullish on crypto, at the intersection of crypto and AI. And some people that we know, like Harmony guys and Stephen, those people are also very interested in that. I think the applications are not clear. I mean, one area that I'm personally kind of acquiring more knowledge in and exploring more is federated learning. It's a way to train a model without using the data on edge devices, without requiring the data to be in a central location, right? So when I say edge devices, it could be anything from your phone to your like cameras or whatever, anything that records data, as well as any data sets that companies or proprietary data sets that companies are not comfortable sharing because it's too valuable for them. But there is an argument can be made that if it's a company A that has, let's say, data around weather patterns, right, and there is a company that has data around where they can find satellite data, for instance, where they're looking for ways to like find like oil and gas fields, right? So maybe if they share their data sets to a central like model. When I say share, they allow the model to be trained on the data without their data leaving their secure environment. Maybe this resulting model will be much more useful to either of these companies or like companies outside of these two companies here. So that's the idea behind federated learning. So I think I don't know where crypto exactly fits in there, but I think there might be an incentivization layer, and there might be a way to trace back the contributions of which data set and how the data set informed the hyperparameters of the model and how those hyperparameters like led to an inference. So maybe there's a way to like trace back all of this using some sort of a ledger, right? So I think that's like one area that I'm personally exploring more and trying to get more knowledge on. But yeah, I think there's going to be like a decacon or even a bigger company that figures out something very useful in crypto and AI space.
Yeah,
The intersection
Ali,
of
let's
crypto and
come
AI
back
space.
to investing.
Yeah.
So you talked about a few things that you are excited about, Celestia, Eigenlayer, Monad, from an opportunity perspective. What about NFT projects? Are there any NFT projects that you've been tracking that could be interesting for everyone here?
NFT projects. I'm currently not buying any NFTs because I'm not seeing any innovation. I think Memeland is doing. I think they just launched their token. So captains and their associated ecosystem is gonna see some interest, I guess. And I think there's a team behind Mad Lads that is trying to launch an exchange in Dubai. So their NFTs pumped, right? So I think those are the two that caught my attention in the recent days, and weeks. But I'm personally not buying any NFTs at this point. I'm keeping an eye towards like new standards like ERC 6551, which makes your NFT a wallet. I think there could be some cool applications there. So once we see, some people are trying a few different things with that, but I haven't seen anything that caught the mainstream attention, probably because of the bear market. But I think there's something that is using newer standards like that. 6251. I think there's another one called I forgot the number. Anything that uses a newer standard, I think will have a better chance of like being a better investment or being a good investment rather than something that uses ERC 71, which is kind of old and not so exciting anymore. And the second one is really from an investment perspective, right? Like for utility, I think ERC 71s are great, and I think for mainstream adoption, where NFTs can be used for, I don't know, storing credentials on chain or storing contributions or even tickets or something like that, memorabilia, something like that. ERC 71 is still great, but from an investment perspective, I think a new standard and what that brings is what you should keep an eye on.
Phenomenal. Are there any questions from anyone on the call? Like, just wanted to ensure if you have a question, just unmute yourself and go for it. Randeep, you typed quite a few questions.
Sorry, I'm driving right now, so I'll have to talk in about 5 minutes.
Okay, sounds good. Adi, two more questions from me. Then I have the first thing is like, so we're getting into this argument about crypto investing that keeps changing, right? Like earlier, Bitcoin was digital gold, so it's your inflationary hedge. If inflation goes up, like so will which means that your dollar won't buy the same thing, but Bitcoin will go up and will kind of compensate for it. Then we started thinking about ETH and Bitcoin and a few others as like majors and alternate asset classes, almost as a replacement to the US dollar. And now we are getting into 2024, where we have seen like severe sort of a winter hit the crypto again. How do you think, like, what's the thesis behind like investing in crypto at this point? What are you hearing?
Like AI has tailwind. So I think I have like two big theses, two or three big theses, right? One, like there's going to be a new L1 that is going to return phenomenally. And second is intersection of AI and crypto. I think that's going to show us some opportunities that are really interesting and really actually useful too. And number three is newer standards, especially in the NFT space. I think newer standards. I'll always keep an eye out on like newer standards because um, NFTs are something that have caught mainstream attention, and I think it will always be the case that there's going to be like a new innovation based on a new standard. So that's talking on the application layer, right? But I think one other big theme that I'm personally not super paying attention to is like decentralized social. So you guys heard about Firecaster and DeSo and obviously the Fintech and Fintechs of the world. I mean, I definitely see the merit in it, right? Because you don't want you don't want your voice, the social voice, to be controlled by one corporation on Market Street in San Francisco, right? So you want to own your data, especially Twitter graph and Instagram followers and stuff, and TikTok followers. They're actually real money, right? I mean, people actually make money on from their community, from their followers, and in terms of various brand endorsements or like launching product lines or whatever. So I think you should not be at a risk of deplatforming. You should not have a platform risk if you're a creator. So that's the argument behind decentralized social, which I think is super interesting. But I personally don't pay attention to it because I'm not a creator and it's not something that I understand super well. But that's another theme that is I think maybe the next big application. Maybe it's instead of NFTs, I think it will be something in the social side.
That's a very, very powerful thing, I think, and very specific too. So thank you for articulating that. All right, I'll ask you like one very simple question. If I give you 10,000 or someone gives you $10,000 today, what will you invest in? How will you allocate that $10,000?
I'm probably going to ape into something. I'm gonna go big, right? So I'm bullish that ETH is gonna breach its previous all-time high of 4,800 or something. So I'm gonna leverage like 10 times that and put it on ETH. But if I do have an opportunity to invest into a seed round or a pre-seed round of a private round before an ICO of a new layer one or something that is either using something like federated learning or FHE or something like that, I put it in there.
Awesome. Tell me a little bit more about the leverage. How do you leverage? And like we understand, like you can buy options, for example, and different kinds of derivative products in the traditional finance space. How do you leverage your ETH in the blockchain world?
Well, when I'm not in the US, I use DYDX because DYDX is not allowed in the US. I think GMX is also very popular. So yeah, I just buy futures at a 10x leverage or something. And
yeah, got it. Similar things, but on a more native derivative exchanges. Brilliant. So two more questions. I have so many things in my mind that I want to like keep going. Like particularly on federated learning, we can go super deep. I think certainly I feel that there is a massive opportunity there to build an index of companies that become mainstream. AI and crypto is the next big rabbit hole that I've seen after anything like from crypto. And then finally, when you're talking about decentralized social, we live and breathe every day. Like we know like how powerful communities are. Building them is exceptionally hard. Data is like often there is a dichotomy of like people who produce the content and the people who make the money. So that scale needs to be balanced. So there are a lot of things that we can go deep on. But from an investing perspective, there is a fundamental view. The fundamental view is very simple. What percentage of my allocation should be in digital assets? Like I know you're a maximalist, so you'll probably have most of your net worth in crypto. But do you have any guidance or counsel on like how someone should evaluate this?
I mean, it's I mean, as you said, as a maximalist, I have 80% of my net worth in crypto, which is not a good advice to anyone, sane. I mean, if you're single and if you're in your 20s, then yeah, just go for it. I mean, like, what do you? I mean, you have nothing to lose, right? It's just money. You can always, if you're like young and like you can always earn more money. But if you're married and you have kids and stuff like that, you have a house and mortgage and all of this, then yeah, you should be more conservative, I guess. And should be less than 20%. That's how I think about it, because right now I'm single and don't really have any responsibilities. Not, I mean, I don't need to take care of anyone else, right? Everyone has, like, my parents are self-sufficient and I don't have any kids. I'm not married, so I can be more degenerate. But if you have other people to take care of, then you should be more conservative.
Got it. Fantastic. I think these were all the questions that I wanted to get through. Are there any questions on the call? Randeep, go for it.
Sure. So could you comment on where you see the regulatory shift coming in the next few years, both on two things, on investors in crypto and also on innovation in crypto. Actually, there's two sets of things, not just regulatory changes plus sovereign, like crypto dollars, right? Like US dollar crypto and things like that. Maybe there's stablecoin today, but maybe there'll be like a government-backed US dollar in the crypto world, as well as we're seeing in other countries like China.
Yeah, I mean, it's interesting because I just saw a tweet from Open, their project that is born out of Berkeley, and actually that's actually one of the first people I met in crypto, like way back in the day. They basically tweeted out that they stopped working in crypto because of the regulatory action the SEC took against Open, which was an open options protocol, if I remember correctly. So people in the US are kind of sketched out right now, builders especially. Investors, I think investors should be fine, but I think builders are sketched out because the SEC goes after the company, not after the investors, right? So because the SEC needs to protect the investors. So like people are, I think in SF today, like everyone's working on AI, no one's working really on crypto. So if you're a builder, I'm seeing less and less energy in the crypto space. I think for the regulation, I don't think they'll regulate it from a tech perspective. I think they'll only regulate it from a money perspective and like KYC and stuff like that perspective. I don't think they'll try to regulate it from tech perspective as they did for AI, where I think they said something like, if you're spending more than 50 million or something in training AI, then you have to report the safety measures you took back to the government. I don't think we'll see something like that in crypto. I think the regulations will come in from people who are running the companies. Like, you need to know your customers and stuff like that. I think that's where I think I see some guidelines coming in. Beyond that, I don't really know because I'm not. I'm kind of. I don't know like how to like base my decisions around what the government is going to do, because it's really up in the air, right? So I don't really think much about that. For the stablecoin thing, I don't think US government will launch a stablecoin, backed by USD, because it doesn't really. The USDC is pretty well regulated already, and there's not really a point in government doing the same. So I don't know, but yeah, I mean, I'm not an expert in like government relations.
I disagree there. I think US will 100% launch a digital dollar. They have to, because the biggest threat to US dollar is someone else's crypto that can be very decentralized. So the whole point of CBDC, or central bank digital currencies, is to ensure that you bring stability back to the market, but with stability comes control. So I think they're going to slow roll it. I don't expect anything to launch in 2024, but there is not a government in the world that hasn't researched CBDCs. I'll be happy to like invite you guys, if you're interested, to Stanford Law School, where I'm the chair of the Stanford Blockchain Group. So we research blockchain law and policy all the time. Brazil is doing some very interesting work. India is going to 100% introduce some digital rupee. China already tried it. I think US is not going to be left behind because it's less about it sort of is less about whether there's a viable alternative versus like whether the alternative can be directly controlled, monitored for KYC, anti-money laundering laws and whatnot for general protection. And usually government wants control. So I think it's going to come. There is no reason for it not to. George, do you want to ask your question?
Yeah, basically wondering how do you balance your work life? I mean, with crypto, given that crypto is 24/7 global, it doesn't sleep, and there's always something happening. And yeah, get your thoughts on that.
Yeah, so far I haven't traded on leverage. So as I said in the beginning, right? So I think once you're trading on leverage, I think that's when the stress gets to you, right? That's when you are like, always watching the charts and whether you're going to be liquidated and stuff like that. I think that will make your life very stressful. But I think in a bull market, I think you can make that, you can, take that chance and for high returns and take that risk. But beyond that, there's no way you can like keep up with everything in crypto. I mean, there's so many things going on, especially like, as I said, like I missed out the whole DeFi thing. And there was like, after DeFi, there's like so many other things. There's like DeFi on every chain. There's like NFTs on every chain, and there's new stuff coming up, decentralized social, and there's like new layer ones coming up. So there's no way that you can keep up with everything. So you develop a thesis and stick to that thesis, right? Right, and like investing into that thesis, for instance, like AI and crypto. So keep paying attention to what's happening in AI and crypto. Maybe your thesis was modular blockchain, so keep an eye on what Celestia is doing and what all these rollups are doing, and how they bring scalability to the Ethereum ecosystem. Maybe your thesis is application layer, right? So maybe in the application layer, maybe it's something more specific like NFTs or maybe social fi or maybe gaming coins or maybe gambling. Like there's so many application verticals. So maybe just pick one or two and stay on top of that. So I think whatever interests you and wherever you think the biggest gains will come from, I think that's where you should pay attention. I don't think anyone has the time or the mental energy to stay on top of everything that is happening.
Got it. Randeep, we can take it your question. We have some time.
Okay, thank you. So I was actually wondering from the portfolio management aspect, how you actually manage risk in crypto investing, and how you structure your crypto investments to pay attention to that risk. I mean, crypto assets tend to be a lot more volatile than almost anything out there. But they, and they also, I like to say, that there's systematic risk and there's non-systemic risk, right? And there's a saying that investors are not rewarded for taking on a certain kind of risk unnecessarily. So how do you actually do the risk management for crypto? It's been very tough for me to figure out how to put in, like conventional day traders, they'll have these stop limits and all that. And it's very hard to do that with crypto because the volatility is so high, you just end up triggering all these limits if you go with limits in. And if you don't have limits in, then your losses could be unbounded. And so then the other strategy is just don't have any limits, but diversify your portfolio. And then when you look at a portfolio diversification approach, you have multiple cryptos, some, like maybe some Bitcoin, some Ethereum, some altcoins, and so on. Some what they call shitcoins and so on. And then the idea becomes, well, then you've got to look at it as part of your entire portfolio, right? Like your retirement savings and everything. What is the purpose of having a crypto allocation rather than having other things like private equity or, other things in that portfolio? Do you have any comments or thoughts? You must have thought about this a lot since, you've already been dabbling in crypto since 2017 and you have made some killings on it. But maybe, like past performance isn't a guarantee of future returns, right? So you must have thought about this and figured out how to kind of cover your behind when you go into crypto and going forward. How do you do that?
So I think there's like two parts. One is like, what is the outcome you have in mind? And second is like, how do you manage your portfolio risk? So, so far I haven't traded on leverage. So, and, right. So, which means that I do not have any liquidation risk. So whatever, and I also like, so far I've only went long, right? I never actually shorted anything. So when you go long, and since have a bull thesis on, everything in crypto, the daily movements of prices do not matter at all because, you're not trading on leverage and you're long. So it's like, if not, in the next month, like in 6 months from now, you'll, the token will go back up. And at least that's the thesis I have, right? So, but if you're a day trader and if you're trading on leverage and all of that, I think I'm probably not the right person to answer because I haven't done that myself. The portfolio management, I think you basically answered your question. So I think you should have certain thesis around where you want money to go, like layer one. Like what is the big layer one that is going to outperform the broader market, as in the Web 2 or the traditional market like stocks and bonds. This is Bitcoin and Ethereum, right? So they're not going away. So like where is my 10x coming from? So maybe that's like a meme coin like Pepe or Bitcoin. There's a meme coin called Bitcoin. And sticker is called Bitcoin. So maybe something like that, right? Maybe you put 20% of your portfolio into that. Maybe you have 20% of your portfolio into NFTs, right? And maybe you have 20% into like alt L1s or like L2s, or platform or middleware place like or like Celestia. Celestia is both a layer one and a middleware, I would say. So I think you answered that question. So I would like I personally am mega bullish on Ethereum, and I'm gonna do leverage trade on Ethereum. Go take a leverage long bet on Ethereum starting in 2024 after the Bitcoin halving, because that's So and yeah, if I get a chance to invest into a seed round of the next big L1, then I'll dump a bunch of money into that. Yeah. So did I answer that question? I'm not sure.
Yeah, I think you did. Thank you. I'm just a little bit curious about your leverage strategy. I've never dared. I mean, crypto to begin with is already so volatile. I've never dared to even consider leverage on crypto. It's like it's super duper volatile, and then if you bet wrongly, you could really lose a lot of money once you start looking at leverage. So are you planning on, in 2024, given the intent that you have, are you planning to use the combination of put call options and whatnot to kind of like limit your losses, limit your gains, and kind of like define a window so that you kind of protect yourself that way?
Hey Radhi, it's very specific to your risk tolerance and like how you like to trade. It's going to be extremely hard to generically answer that question. It really depends on like sort of like what your outcome is, right? There is so many exotic combination that you can build with your option and derivative strategies that I think it's a better view would be to talk to professionals and advisors who can like guide you there versus get like generic answers. That will be my counsel. Like Adi, I don't know how much like from what Adi was saying, like he said that he's mostly gone long. So the risk tolerance in just like long is different than like when you get long, short, and you can like buy different kind of like time horizons, and you have to then worry about like contango bleed and like 20 other things. So my perspective would be that talk to someone like who's actually been like actively doing options trading, and we'll try to bring someone who has in subsequent calls.
Yeah, I mean, I don't even know. Yeah, like the call options, put options, contangos. I don't even know these terms like very well. And because as I'm not a trader, I just I'm a long investor, and the only risky thing I'm going to do next year is going leverage long. That's pretty much it. And I don't think I'll do any risk management there because I'm gonna dump some money and just go to next leverage and see what happens. And that's pretty much it. I'm gonna put some stop losses, but apart from that, I don't think I'm gonna do anything fancy.
Awesome. And guys, what a great! I think Kiran, you have a question. Sorry, go for it.
It's just I don't think we covered this, but just checking around the STO market at this point of time. So how is it looking? are there interesting projects coming there? And, what kind of liquidity are we seeing in that kind of market? I'm just trying to
Yeah,
get
it's
a sense
interesting.
of
So
that.
I think I completely forgot this. Yeah, one other big theme that I've seen many people excited about are real world assets, bringing tokenizing real world assets, and I think it has some legs. I know a couple of projects that are building in the space, and I've invested into one of them. I think it's interesting. I think Centrifuge. I think Centrifuge is one platform that launched. I think I don't know when, but I think they have around $250 million in TVL on their platform. I think they're currently tokenizing treasury, US treasuries, and a few other assets. I think it has legs because countries like India and some other countries are getting prosperous, right? They have more disposable income now, so they want to get exposure to like a French chateau, or like a fancy hotel in London, or US treasuries, something boring like that. I think that is a very interesting space, and I think apart from that liquidity question around Centrifuge, I think they have 250 million TVL. I think it's going to grow. I'm not sure the whole market, how big the entire current market is and liquidity is like. But yeah, that's one area that I think will grow in leaps and bounds.
Awesome. With that, Adi, I wanted to thank you for coming today. Like, thanks for your insight. I love like how specific you were, like where you see opportunity in the hopefully upcoming bull market. And I also appreciate like your candor to say that like not even you who were a crypto maximalist can capture everything. Same as DeFi. I really appreciate you walking us through your journey, as well as like counsel on how we can potentially leverage some of your learnings. Thank you so much for your time, man. And thank you everyone for joining. We'll be back next week. And next week, we'll be talking about investing in real estate. I'm pretty excited about it because after crypto, real estate is my second favorite asset class. So look forward to that, and have a good evening, everyone.
We'll tokenize and put that on chain, make it crypto. All right, see you guys.
Cheers.